Right now, we're living through a massive, totally unprecedented shift in how the world operates. And with it comes a pretty dark reality. The rise of artificial intelligence is fundamentally changing the digital landscape. Sure, it's making us more productive, but it's also arming bad actors with weapons of autonomous, machine-speed destruction. Traditional network defenses, honestly, they're failing. But there is a shield. In this explainer, we're breaking down a company that's quite literally turning the internet into a secure corporate network. They're using a zero-trust architecture to stop these advanced AI cyber attacks dead in their tracks. We're looking at Zscaler, ticker symbol ZS. It's time to turn your AI confusion into AI confidence.
Okay, let's dive into this, because the sheer scale of what's happening behind the scenes of corporate America is staggering. Just look at the Threat Labs 2026 report. We've seen a massive 91% year-over-year surge in enterprise AI usage. Customer AI activity has completely sprawled out of control, touching more than 3,400 different applications. That's literally a 4 times increase in just the last 12 months. And here's the kicker. Data transfers to these AI applications have shot up by 93%. Sensitive corporate data is just flowing into AI at record speeds, creating a massive new attack surface.
The reality of this threat is perfectly captured by Deepan Desai, the executive VP of cybersecurity at Zscaler. He said, AI is no longer just a productivity tool, but a primary vector for autonomous, machine-speed attacks. When you pause and really think about that phrase, machine-speed attacks, it changes everything. In this age of agentic AI, where AI agents act independently, an intrusion can go from discovery to lateral movement to full-on data theft in just minutes. Legacy firewalls and traditional VPNs simply can't react fast enough. They are being rendered completely obsolete. So, what we have today is the ultimate battle in the enterprise landscape. On one side, you have what we can call the cyber attract model. Legacy firewalls and VPNs basically put a company's network on the open internet, visible to anyone. If an attacker breaches the perimeter, they can roam freely and move laterally to steal data. It's an absolute magnet for attacks. Contrast that with the other side of the ring, a zero-trust solution. This is an AI-native approach where applications are literally invisible to the open internet. Access is granted based on identity, context, and strict policy, not simply being on the network. Think about it. If the attackers can't see the target, they can't hit it. So the choice for enterprises really is a cyber attract or zero-trust solution.
And this brilliantly illustrates the engine creating that invisible shield, the Zero Trust Exchange. It's a globally distributed software-defined gateway that replaces all that clunky legacy hardware. It sits directly between the user and the application, inspecting traffic inline. And look at this scale. It processes over 400 billion transactions every single day, with a sub-50 millisecond median latency across more than 150 global data centers. That's fast. And every single one of those billions of transactions trains Zscaler's AI models, making the platform continuously smarter and building a nearly impenetrable competitive moat. Let's move to and see how this builds out financially, because Zscaler's company's business model and growth engine is a textbook example of high-quality, predictable SaaS revenue. Roughly 98% of their total revenue comes from highly predictable SaaS subscriptions. They run a classic land and expand playbook. Enterprises start with one module, like secure web access, and inevitably add private app access and digital experience monitoring. This drives their net revenue retention consistently above 115%, and with their newly optimized Z-Flex purchasing program, they made it easier than ever for massive enterprises to adopt their entire platform.
That land and expand strategy isn't just theory, folks. It's converting directly into hard cash. Just look at the milestone in the second quarter of fiscal 2026. Zscaler's annual recurring revenue, or ARR, grew 25% year over year, decisively crossing the $3.359 billion mark. To be a SaaS provider generating over $3 billion in ARR while still growing at 25%, that is a rare, elite category in the software world. But revenue growth is really only half the story. The other half is how efficiently you deliver that service. Let's look at the financial numbers and profit growth with margin. Zscaler is operating at a massive 77% gross margin. Compare that to elite peers in the cybersecurity space. CrowdStrike is sitting around 74.2%, and the hardware legacy giant Palo Alto Networks is near 73.4%. This 77% margin is a massive competitive advantage. It proves the inherent long-term scalability of Zscaler's pure cloud, hardware-free architecture. Now, let's step back and apply some true financial literacy here, because we absolutely have to look at the contrarian view. The stock market is pricing in a lot of future success. Zscaler trades at a premium valuation, around a 17.7 times forward price-to-sales ratio.
On top of that, for the full fiscal year 2025, they posted a GAAP net loss of $41.5 million. Now, when you see a full-year net loss alongside that premium, understand what it means. This stock's valuation demands absolutely flawless execution from management. Any slip in growth, and the market will punish the stock.
But context is everything. That GAAP loss isn't a red flag signaling a failing business. It represents the calculated cost of innovation. In the software world, taking a loss today to aggressively invest in sales and marketing makes a lot of sense when you're locking in massive long-term lifetime value from enterprise clients. Those strategic losses are actively funding aggressive R&D, the rapid rollout of new AI security modules, and a huge enterprise land grab in a market that's consolidating fast. Plus, Zscaler is operating from a position of immense strength. They're sitting on over $3.5 billion in cash equivalents, and short-term investments. They're a cash flow positive machine, which makes any convertible debt highly manageable while they aggressively capture market share.
And if you want to know if that aggressive land grab is actually working, we need to examine their recent investment, future growth, and backlog orders. Zscaler's remaining performance obligations, or RPO, just surged to $6.1 billion. That's a 31% growth year over year. RPO is one of the most critical indicators of future revenue predictability because it represents contracted money that simply hasn't been recognized on the income statement yet. A 31% backlog surge signals unshakable long-term demand from some of the largest enterprises in the world.
Now, what's really interesting about this is the mechanism securing those massive backlog numbers. It's coming heavily from their Z-Flex purchasing program. Z-Flex allows customers to commit spend upfront and then flexibly deploy it across multiple different modules without needing new procurement cycles. In Q2 alone, Z-Flex deal wins drove over $290 million in total contract value. That is up more than 65% quarter over quarter. They are landing 8-figure multi-year deals with Fortune 500 retail companies and massive financial institutions who are adopting 10, sometimes 11 modules at a time.
To keep this platform at the absolute cutting edge, management is actively deploying that massive cash pile into highly strategic M&A. In 2024, they grabbed Avalar to build an AI data fabric. Then, in Q1 of 2026, they closed Red Canary and SPLX to bring agentic security operations and AI red teaming in-house. And just recently in Q2, they acquired SquareX to build a native zero-trust browser to secure unmanaged devices. This rapid string of acquisitions is seamlessly weaving together a unified AI-driven security posture that protects against patient zero attacks across the entire digital ecosystem.
All of this strategic maneuvering funnels directly into Zscaler's 3 core pillars of future growth. Pillar 1 is AI security, protecting those autonomous agentic workflows we talked about earlier. Pillar 2 is Zero Trust Everywhere, which expands protection beyond just users to securing entire physical branches and cloud workloads. And get this, the number of Zero Trust Everywhere customers just surged from 130 to over 550, and management notes these customers can yield 2 to 3 times higher recurring revenue. Finally, Pillar 3 is data security everywhere, making sure sensitive corporate IP never leaves the designated ecosystem.
This constant innovation is actively expanding their total addressable market. Take their agentic IT operations, powered by ZDX Copilot. They're combining agentic technology with a conversational interface to automate troubleshooting for network issues. Bookings for ZDX Advanced Plus just crossed $100 million, growing over 80% year over year. Remember those 400 billion daily transactions? They are using that unparalleled proprietary data lake to out-train competitors' AI models. It's cementing their market leadership in a way that smaller players simply cannot replicate.
So, with all this operational execution and market-leading margins, we have to ask the ultimate question. What is in there for investor? Could this cash flow positive machine be the next boomer in the cybersecurity space? Or is the hurdle just too high right now?
So the crucial point is grasping the modern investor essence. Over the past year, we've actually seen a 30.6% drawdown in Zscaler's stock price, pulling it back significantly from its highs. Yet, as we just walked through in this explainer, the underlying fundamentals tell a story of sheer dominance, a $3.36 billion recurring revenue engine growing at 25%, and a massive $6.1 billion backlog of committed capital. Finding the right entry points in a premium-valued growth stock requires 2 things: patience and courage. You need the patience to let the valuation metrics compress during market volatility, and the courage to buy into the execution of a best-in-class business model when others are panicking.
The cybersecurity landscape has permanently shifted. The era of the legacy firewall is completely over, replaced by the absolute necessity of the zero-trust exchange in an AI-driven world.
You now have the facts, the financial metrics, and the strategic roadmap. So are you ready to turn your AI confusion into AI confidence? Based on the massive backlog, the incredible margin profile, and the undeniable enterprise shift towards zero trust, the time is right to start building your conviction. Is the time right to start building your position? I'll leave you to crunch your own numbers and decide. Keep learning, stay focused, and I'll catch you on the next one.